Good afternoon, everyone. Today, our lesson will be accounting information. Let's start.
Firstly, we have the asset. Asset are resources owned and controlled to produce economic benefits to the business. It can be in the form of cash, property, and even equipment. They help the business generate revenue or support its operations.
Liability refers to the financial obligation of a company that results in the company's future sacrifices of economic benefits to other businesses. Liability refers to the debts or obligation that a business or individuals owes to others.
Third, we have the owner's equity. This represents the owner's investments in the business, as well as any profits or losses that have accumulated over time. In simple terms, it's what the owners get to keep if the business were to sell all its assets and pay off all its debts.
A financial statement which summarizes a company's assets, liabilities, and shareholder equity at a specific point in time. It is one of the three core financial statements used to evaluate a business. It represents the company's assets, liabilities, and equities in a structured format. Here's the example of balance sheet.
We also have the account equation. In simple terms, it says that everything the business owns is funded either by what it owes or by the owner's investment. The equation looks like asset equals to liabilities plus owner's equity.
Earlier, we talked about assets, liability, and equity. We prepare a pre-activity to test and simulate what you have learned. In this activity, I will give it 10 seconds for you to identify what is assets, liability, and equity. Let's start. Now, time's up. Here's now the answers of the pre-activity. Cash is asset, credit card is a liability, and investment is an equity.
Lastly is the income statement. It is a key financial document that shows how much money a company earned, how much it spent, and the profit it made over a certain period of time. It is closely related to the balance sheet because the results from the income statement are used to update the owner's equity section of the balance sheet. Here is an example of an income statement.
Header. The header of a balance sheet and income statement consists of three important information. A. Company name. B. Name of the financial report. And C. The date.
Account titles and amount. On the leftmost side of the financial report is the account titles under the components of the financial report. In addition, the amount corresponding to each account titles are placed on the rightmost side of the report.
Balance amount. On the bottommost of each report is the balance amount. In the income statement, it is also known as net amount or net income.
In preparing the income statement, you must know the 5 major accounts. The 5 major accounts divide a financial report into important portions, which are the asset, liability, equity, revenue, and expenses.
That's it for today. Thank you for listening.